What is up, everybody? My name is Crypto Noah, and today we are going to be talking all about Bitcoin. So this video is going to be the deepest fundamental analysis on Bitcoin that you will ever find. So if you were unsure if Bitcoin was a Ponzi scheme, or if you're like, man, I don't know how Bitcoin has value, or if you're looking at gold like, oh, gold has value because you can touch it, or you're just unsure and you're unsure about crypto or whatever the case may be, I guarantee you after this video, you're going to be convinced. So let's get right into it. So if we hop over here, in order to see how Bitcoin has money, because remember, Bitcoin was designed to be a premium store value, like hold your value long term. We have to see how gold has value to see how Bitcoin has value, okay? Because they call it Bitcoin digital gold for a reason, and we're going to cover all of that stuff here. So if you haven't read the book Bitcoin Standard, by the way, highly recommend. I'm going to be doing a book review on it, so look out for that. But let's go to this chart one by one. You've probably seen this. So these are traits of money, and this is gold versus fiat. So let's get right into it. So you have fungibility as one of the hard money properties. So fungibility means you can exchange one for one. Like $1 is equal $1 anywhere in the world, just like 1 ounce of gold is the same amount as another ounce of gold in a different state or continent or country or whatever. So now you have portability. So fiat is very portable. One, because in today's age we have banking apps, so we can just put our phone in our pocket, and technically our fiat's portable because we can travel with it. But with gold, it's not so easy. Let's say I wanted to do a business transaction with you and you're in the Philippines and I'm in the United States. Well, if I want to use gold, it's going to be expensive to do that. It could get lost, it could get stolen. So that's why portability is moderate. So then we have durability. Like at the top of here, it says gold's properties made it the best form of money throughout history. Now, going back to durability, if you just look at the periodic table of elements, by process of elimination, gold is the best form of money. All of the other assets, when they get too hot or too cold, they could erode or wither away or melt or rust. Gold is the only element on the periodic table of elements whereby you could burn it down and form it back together and it won't lose any of its properties. Very important. So now, divisibility. So before people were using gold, people were transacting in cattle and rocks and beads and all this. But let's talk about cattle. So it's like, let's say you're the salt guy and we're doing barter and trade and all I have is cows. Well, my cows can die. I can't travel with them. More importantly, they're not divisible. So if I wanted to buy some salt from you, I can't just cut my cow's leg off and be like, give me this much salt. No, I have to give you a whole cow. Now I have to take home a mountain of salt. And I might not need all of that. Well, gold came around and like I said, we can burn it down and form it back together. Then you had gold coins. So now you can be like, all right, let me get this much salt or this much carpentry services or whatever the service is that you're buying. So divisibility, gold and fiat is divisible. Verifiable, cannot be counterfeited. So these both get a moderate because we've all been to a store where if you pay with a 20, they'll hold it up to see if it's fake or not because there is fake money and people do fall for it. It's the same thing with gold. Going back centuries, emperors and kings would make gold coins, but as time go along, they would debase the currency by putting less and less gold into the coins until it was just like bronze or copper. And it's not the easiest to tell. You have to have a certain kind of either technology or tool or whatever the case may be. Scarce, predictable supply. So obviously fiat is not scarce because you can just click a button and just print trillions of dollars, which is what happened the past 2 years. And for gold, it is scarce, but who's to say that if I go out in my backyard and start digging a hole, I can just strike gold literally, and let's say I dig up 1 million tons of gold. Well, now gold is going to be worth a lot less because the stock to flow is going to be decreased. Fun fact about gold, did you know that all of the gold in the world burned down to its purest form only fills up 3 Olympic-sized swimming pools? All that fighting for 3 swimming pools. I digress. Also, gold has a approximately 2% annual inflation rate, which means whatever the existing supply is, 2% of that gets added to the market every year. So that means every 50 years, the supply of gold doubles. So if I wanted to save money for my great grandkids and I had it in gold, and let's say I saved in $1 million and they can get it in 50 years, well, it's only going to be worth $500K. That could be a problem, or that is a problem. Easily transactable. Gold gets low because it is not on a network and we are living in a digital age. Also, I don't care what store you go to, 9 times out of 10, they're not going to accept gold. They're probably going to want fiat or even some crypto. And obviously fiat is easily transactable. Apple Pay, Google Pay, cash, debit cards, self-explanatory. Expensive to produce. This is one of the most important ones. So in order for something to assume a strong monetary value, it has to be expensive to create, because if it's not, the incentives to create it for the cheap is going to destroy the wealth of the savers and any incentive that anyone has to save in that medium. So with fiat currencies, the Federal Reserve presses a button, they print more money, and they use that purchasing power to, fund wars or whatever. And now once that money gets out to the system, everyone else experiences inflation afterward. It's no elbow grease that went into creating it. Whereas with gold, you can't just press a button and create more gold. You have to pay a geologist to go and say, hey, there is gold on this part of the ground. Then you have to pay to set up a gold mine. Hats, gloves, shovels, employees, equipment, you name it. You have to pay to dig it out of the ground. You have to pay to pull it back up. You have to pay to burn it down because it's going to be rocks and all kind of stuff on top of it. You have to pay to form it back together. And then when I walk into the jewelry store and pay whatever for this necklace, let's say $300, $400, $500, depending on, how many carats of gold it is, its price is justified because of how much human effort and energy went into actually producing it. So that's very, very important. And then at the bottom, we have government issued. Obviously, if a government can issue it, you're gonna experience inflation, because I don't care how high your integrity is or whatever, you're gonna be tempted to print money if you have the power to do so. So it's best to have something that comes from the free market, like gold, that's just in the ground and you kind of have to find it. And then easily self-custody. Gold is not easily self-custody. And to be honest, it's the whole reason why we experience these booms and busts all the time, Think about it. If you have $1 million in gold in your house, you're probably not going to want to keep it there because you're scared someone's going to break in and steal it. So you go to the bank and they're saying, oh, store your gold here. Here's a receipt to redeem your gold, which is what it used to be back in the day. It used to be your receipt. It's a promissory note. A promise to redeem your gold is what it's supposed to be, but now we kind of use it as money. And then they have the gold in their vaults, and throughout history, every single time, they always print more money than they have in gold. The people eventually realize it. It's a run on the banks, inflation, and this whole thing's been cycling for centuries. Fiat is easily self-custody. You don't want just cash under your mattress, but you can have it in a bank account and just have it on your mobile app and just kind of do it that way. So now we know how gold has value. Let's look at how Bitcoin has value, and let's look at Bitcoin versus gold. So going through these same qualities, and you can see all the green on Bitcoin's side. Fungibility. 1 Bitcoin is equal to 1 Bitcoin anywhere in the world. Portability. We already talked about how gold isn't portable because you can't travel with it. It can get lost, it can get stolen. Well, hey, guess what? With Bitcoin, I can have $1 billion in my pocket and you'll never know it. I don't need a bank to store it for me. I can get on a plane. I can travel through borders. TSA isn't gonna give me any issues. I can drive across the border. I'm not gonna get any issues from Border Patrol. It's a lot easier, and it's lightweight. It's weightless, actually. Durability. Bitcoin is very, very durable because it exists on the most secure network in the world, and it's on a ledger that is immutable, that can't be tampered with. And we already talked about how gold is durable. Easily self-custody. We just kind of elaborated on that. Gold needs a custodian because it's heavy. Bitcoin doesn't need a custodian. So divisibility. Bitcoin is also very, very divisible. So just like 100 pennies equal $1, 100 million Satoshis equal 1 Bitcoin. And any supply of money is good for any size, country, or economy as long as its units are divisible enough. That's very, very important. Secure. Bitcoin cannot be counterfeited. It was literally created to solve the double spend problem. You can literally see every single Bitcoin transaction all the way back to the very first transaction if you just look at the blockchain. Every single transaction is recorded. So in terms of gold scarcity, we already talked about how it has a 2% annual inflation rate and the supply doubles every 50 years. Well, with Bitcoin, no matter how much the demand increases, you cannot increase the supply. Why is that? If the price of gold goes up, you're going to see gold mines popping up left and right because they're going to be like, oh, let's mine more gold so we can sell more gold and make more money. But if the price of Bitcoin goes up, Well, more people will still try to mine it, but Bitcoin has what's called a difficulty adjustment that changes every 2 weeks that says if more people are mining, it's going to be harder for your mining rig to guess the algorithm so you can get the block reward. If it's 32 characters, if more people starts mining, then it's probably going to go to like 60 characters. So now it's harder for your mining rig to guess it. And then let's say less people start mining it because the price goes down, because this is what happens. You know, you have to be mining a certain amount to be profitable. Well, if that happens, the difficulty adjustment is going to get easier, so that way it can still keep its same inflation schedule, which is around a block every 10 minutes or so. Okay, easily transactable. We already talked about how gold is not easily transactable. Bitcoin is very easily transactable because I can move $1 billion in 1 minute or in a matter of 10 minutes, and I can send it to the other side of the country. The crazy thing is, living in the age that we're in, if I want to send $10 million from here to China, guess what the fastest way to do it is? It's to take the cash, get on the plane, and fly it to you. And it's 2022. Well, with Bitcoin, I can move $1 billion from here to China, from here to Africa, from here to Russia in a matter of 10 minutes. I don't have to worry about if it's going to get there or not because it's on the most secure network in the world. And it's going to cost me, you know, at most a few dollars. So that's that. Expensive to produce. I just said that in order for something to assume a strong monetary value, it has to be expensive to produce. Because if it's not, it's going to destroy the wealth of the savers. Bitcoin is also expensive to produce. So just like you have to physically mine gold, you have to virtually mine Bitcoin. And the price of Bitcoin came from the free market just like gold. Like the price of Bitcoin originally came from how much you spent in electricity to mine it. So just like you have to pay to operate a gold mine through employees, equipment, gloves, shovels, all that stuff, same thing with Bitcoin. You have to have employees to manage your rigs. You have to buy a warehouse. You have to keep the fans cool. You have to hire security. You have to buy wallets and all this stuff. And then you have to pay a extremely high amount in electricity. So that's how the price of Bitcoin is justified. Energy, just like gold. Next thing, sovereign government issue. Obviously, Bitcoin is not government issued. Thank God it's not. You just kind of mine it in cyberspace. Just like you find it in the ground, you have to mine it in cyberspace. And then Bitcoin is decentralized. Gold is very centralized. Like back in, I forget the year, they issued an executive order and made gold illegal to own. And that's a big reason how central banks have a lot of the gold. Well, Bitcoin, like imagine if gold was on a network and that executive order happened and you have family in Africa, you'd probably send that gold to Africa so you don't just give it up. Well, if they issue an executive order and make it illegal to own Bitcoin, they will have to do it everywhere, because if I know it's illegal to own Bitcoin and I'm here in the US, I'm sending it to family in Australia or Africa or some company in some Swiss bank or something like that. And then programmable, smart programmable. So Bitcoin is programmable money. Every single cryptocurrency came from Bitcoin, and it allows for smart contracts. You can basically program programmable functions that say if this then that. More importantly, gold is a defective asset on a non-existing network. What do I mean by that? Bitcoin is an asset, a network, and a protocol. The asset is capped at 21 million. The network says, hey, I can send $1 billion of Bitcoin from here to there in a matter of minutes for cheap. And then the protocol says, if I want to sync up Bitcoin on some underlying payment app or device, I can do that. Like I can synchronize Bitcoin on Venmo and Square Cash and just have it synchronized with integrity and have all the balances updated in real time. There is no way to upload all of the physical gold and the gold derivatives to a network in real time. Like you just can't do it physically. Like it's impossible. Here's another thing. When you are mining gold, you have three enemies. You have the bankers who are against you. You have the miners who are against you, and then you have the people who are against you. So let's go through all those three. When the price of gold goes up by a factor of 10, this is why you don't want to store your value on something that's industrial metal, using silverware and stuff like that. When the price goes up by a factor of 10, and this is why gold topped out in the 20th century, everyone's going to be taking their necklaces, their rings, their lamp to pawn shops and gold refineries so they can get some money. So it's going to keep the price down. Your next enemy are the bankers. Like I was saying earlier in the video, if you have all the gold in your vault, you're going to short it because you know people aren't just going to come and redeem their gold. It's just not common, you know? The last and probably the biggest enemy are the miners. When you are mining gold, you're not going to mine the gold and hold it and wait for the price to go up to sell it. No, running a gold mine is expensive. So you're going to mine the gold and you're going to be constantly sell it so you can cover the cost of your mine. So you have gold miners selling billions and billions and billions of dollars of gold onto the market, and it's keeping the price down. Yeah, you have the same thing happening with Bitcoin too, but that's not going to continue. Like, these miners hate selling their Bitcoin, and pretty soon these miners are going to start raising fiat capital. So they're going to take the fiat that they raise to run their mine so they don't have to sell their Bitcoin. Shit, if they do sell their Bitcoin, their shareholders are going to sell their stock. So keep that in mind. But what this all boils down to is property rights. And, you know, I feel like it's a tragic misnomer to call Bitcoin a cryptocurrency. I call it a crypto asset. In order to be considered a currency, you have to be deemed non-taxable upon transfer, and Bitcoin is not. So when you realize that, it gives it hope, because you realize Bitcoin isn't competing with the dollar or the euro or the Turkish lira or the digital yuan. It's competing with stocks and bonds and precious metals and commodities and other assets. So now let's look at other assets, because as we said, this is about property rights. Let's talk about scarcity. If the price of single family homes go up, you're going to see people building more single family homes. You can always build more homes on the beach. You can split stocks. Like, people in other countries can't even buy US treasuries or US bonds. Like, Bitcoin is a global asset that the whole world can speculate on. So it's like, what's better? If a government comes and tries to take my house, you know, I can't move my house if I don't like the jurisdiction it's taxed in. I can't move a bond overseas. Yeah, maybe I can move a Van Gogh painting, but it's not on a network. Bitcoin and crypto is something to where if you threaten to shoot me, you can't take it. If you actually shoot me, you can't take it. If you burn down my house, you can't take it. If I know you're coming, I can zap it to the other end of the planet in a matter of minutes. If I don't like how it's taxed in United States, I can move it to Wyoming. If I don't like how it's taxed in Wyoming, I can move it to a Swiss bank. If I don't like how it's in a Swiss bank, I can move it to my mobile phone. If I don't want it on my mobile phone, I can burn the C phase and memorize it. No other property allows you to do that. Remember, Bitcoin is a protocol, just like TCP/IP, just like email is a protocol. Imagine if you could own a piece of email protocol or TCP/IP, something that everyone in the world uses. Well, hey, guess what? Bitcoin is real estate in cyberspace. Right now, only 200 million people live there. In the future, 5 to 7 billion people are going to live there, and you get to own a piece of it. Like, Web3 and Bitcoin and cryptocurrencies is about property rights and having ownership. So with that, I'll conclude the video. Hopefully this made a lot of sense. If you like it, please like, comment, subscribe. I really hope to hear from you, hope to meet you. But until then, take care, and I'll see you in the next video.